Friday 13 could become the fly in the ointment and spoil a successful trading week on Wall Street. The economic calendar is taking a back seat as investors are focused on corporate news. Today, top American banks are due to report on their financial results for 2022. InstaForex analysts have already evaluated some reports. The benchmark stock indexes defied the tradition to develop a rapid rally after inflation data, and this time Wall Street indexes responded to the CPI report with cautious optimism. The stock indexes closed yesterday with modest gains. The Dow Jones climbed by 216 points or 0.64%. The Nasdaq went up to the same extent. The S&P 500 gained 0.34% to close at 3,983 points. The stock market traded in the red in the pre-market, digesting gloomy forecasts and dismal news. The major stock indexes lost the gains of January and slipped by 0.8 and 1.09%. The S&P is likely to trade in the intraday corridor between 3,860 and 3,980 points. The benchmark indexes closed in the green on Thursday after the CPI report showed a long-awaited downtick in inflation for more than 2.5 years. The report confirmed that inflation is losing steam. Following the news on a sharp decline in the annual CPI, Wall Street indexes surged by more than 5% for the first 2 weeks of the year. The VIX, which measures volatility of US stocks, stumbled to the lowest level since April 2022. The good news for Wall Street was clouded by evidence of the healthy labor market. Nevertheless, the Fed funds futures indicate a 91% chance of a rate hike by 25 basis points at the Fed's meeting in February. As for the corporate news, Microsoft shares rose by 1.2%, propelling the growth in the S&P 500 and the Nasdaq. The energy sector grew by 1.9%, logging the biggest gain. On a Friday, the euphoria ebbing away and investors are shifting focus to corporate reports. The question is how US top lending institutions cope with the economic downturn. Today, investors are alert to reports by JP Morgan, Citigroup, Bank of America, Bank of New York Mellon, and Wells Fargo. JP Morgan said on Friday that it set aside $1.4 billion in the face of a mild recession. The bank also reported higher than expected quarterly revenue. Its profit in the fourth quarter equaled $11 billion, more than $10.4 billion a year ago. JP Morgan CEO Jamie Dimon said that consumers still spend extra money and companies remain healthy. He pinpointed such risks as geopolitical tensions and unprecedented aggressive monetary tightening. The bank's shares slumped by 3% in the pre-market. Bank of America also reported stronger than expected revenue in the final quarter. Net profit expanded by 29% in the fourth quarter to $14.7 billion. The bank's net income increased by 11% to $24.5 billion. Bank of America shares inched up 0.3% in the pre-market. The next bank to report its financial records was Wells Fargo. It reported a 50% decline in profit for the fourth quarter, missing analysts' estimates, as the bank racked up more than $3 billion in a cost related to a fake account scandal and boosted loan loss reserves for potential economic slowdown. The fourth largest lender in the US reported a profit of $2.9 billion, or 76 cents per share in the fourth quarter. much lower than $5.6 billion and $1.40 per share a year ago. The bank's shares fell 2.8% in the pre-market. Tesla also encouraged investors. Its stock tumbled almost 6.12% before the opening bell after the company slashed its price tags for e-cars in Europe by a whopping 20%. The stock indexes have troubles extending their growth today. The US dollar index is on the defensive after a sharp fall yesterday. In the light of the inflation data, its index dropped to 102.20, the lowest level in 6 months. The instrument grew intraday and regained just 0.15%. The intraday CAD for the index is seen between 102.10 and 102.70. Yesterday, the US dollar index fell by 0.8% to 102.20, the weakest level since June 6. Besides, the greenback slumped to nearly 9 months low against the euro. All in all, inflation in the United States has been easing for 3 months straight. This trend might assure the US Fed to moderate the pace of further rate hikes from February. The US dollar is also dented by cautious rhetoric of Fed policymakers with dovish notes. James Bullard said that the inflation data confirms the Fed's policy in the right path and the US economy is on the verge of deflation this year. He also added that the Fed is on the thorny way to bring inflation to the target level of 2%. Such comments reinforce investors' confidence in the dovish reversal in the Fed's rhetoric. In this context, the US dollar index is on track to the steepest weekly fall since early November, that 1.5%. The Canadian dollar is consolidating gains, having strengthened to 1.3410. The USD CAD pair grew 0.34% in the pre-market. It's expected to trade in the intraday CAD between 1.3380 and 1.3440. The weaker US dollar and the robust oil rally cemented investors' hope for a strong energy demand in the second largest global economy. Oil prices are extending their winning streak. They could close this week with roughly 7% gains. Bitcoin is struggling to consolidate its gains. The top token was able to spike 6% to $19,005 on the back of the greenback's fall. Bitcoin grew $1,075 from yesterday's closing price. All in all, the crypto surged 15.2% compared to the one-year low of 16,496 printed on January 1. The flagship crypto shed some gains. It was trading at $18,888 today, amid risk aversion and downbeat news. Singapore-based Crypto.com fired almost 20% of its employees due to market malaise triggered by the FTX crash. Bitcoin is the only crypto asset to trade in the green. Altcoins printed losses. If Bitcoin fails to cling to 18,800, it could slip to $18,200. Alternatively, there is a chance to rise to $19,200. Our team wishes you to live for the weekend with gains despite market pessimism. See you online next week.